Now let's come to the real cost of the tariff war. Most of this happening in the last few months. This is the timeline of the tariff talk, if I may say. President Trump comes in January 20th, and immediately on coming in on 30th January, he announces that 100% tariffs on BRICS countries are going to be proposed. 1st February, he comes and says 25% tariffs on Mexico and Canada, 10% additional on China. Within few days of that, 10% on China imports is imposed. Within 3 days of that, reciprocal tariffs on all other countries are proposed. Within 5 days of that, 25% automobiles, pharma, and semiconductors are threatened to start from 2nd of April. Within 2 weeks of that, it delayed the effective date for tariffs on Mexico and Canada, which he had announced on February 1st. On 12th, the effective date for bringing tariffs on steel and all aluminum were raised to 25%. And then on April 1st, recommended that America first trade policy focusing on China, Mexico, and Canada. And 2nd of April, details of further reciprocal tax were announced, and so on and so forth. So every few days, there is a so this is a tariff oriented Trump administration that has come into the office. Their whole and full focus is on tariffs and how to extract money from the other countries. US domestic markets, since Trump came in, 6,000 was the S&P 500 level when Trump came in, and since the tariff talk started, it came down to nearly 4,800, stabilizing somewhere near 5,000 mark right now. About 20% market cap of US is lost. Thank you very much, Mr. Trump. And apparently no yet gain for the US. Nasdaq also losing big. It was trading somewhere near 22,000, very stable, collapsed to 16,000, and now at 18,000 odd. Very little confidence right now in that market to go up. US dollar index has collapsed from 110 to nearly 99 as of yesterday. So if nosedive of US dollar is happening versus other currencies, this is what one of the intention of this tariff war was and is, that the Trump administration wants to see the US dollar decline versus other currencies so that US exports may do well. Well, that will happen once US has those kind of exports and manufacturing base in the US. For now, as the US dollar goes down, all these tariffs that have been imposed on other countries, which are going to make products more expensive for the American consumer, the dollar itself losing value is creating an additional invisible tariff on themselves of nearly 10% within the last 2-3 months, which is just shooting yourself in your own foot kind of syndrome. US government bonds. Now, this is one of the key focus areas for the US administration, that bond yield should come down, interest rate should come down. But 10-year yield on the US bond has hardly budged from where it was when he came into office. It was 4.65. We are now at 4.42. So the house has been burned down, yet the mortgage still remains. Yields are, something which are not in the control of any person. The markets will determine that. As foreigners continue to sell US equity, as foreigners sell US dollars, that money is not rotating back into US treasuries, which was the normal cycle. That market falls, people move out of equity and move into bonds. That 60-40 sweetheart portfolio that the world is used to is no longer working because bond yields are not going down. Bitcoin, which is supposed to be a hedge against the conventional assets, has failed miserably in this regard. It is down from 110,000 to almost 82,000. And I would have expected that this exit from the markets, exit from bonds, would have caused money to come into crypto assets or Bitcoin in particular. That has not yet happened. So, having a very high correlation for Bitcoin with the US markets defeats the entire purpose of having Bitcoin in your portfolio, in my view. Commodities, other commodities, let's say silver. Silver from the start of the year went up, but it collapsed and is hardly up for the year now, maybe a couple of dollars. And silver is exactly showing you why you need to stay away from this speculative asset class. It is good when it's in trend, but it will kill you when the trend changes against you. It is not a asset to be traded easily. I mean, if you are in for the long term CAGR returns on silver also are not so good. So I would recommend against trying to buy silver as a poor cousin of gold, for instance. Silver is no substitute for gold. Let me tell you that. We'll come to gold later on. Oil has been collapsing. Oil is down from $82 when Trump came in to nearly $58 also 2 days back, now stabilizing at 63. Oil is severely suggesting that the world is going into a recession. Oil is that front end indicator for economic activity, and that is collapsing, and this is really a very, very dangerous sign. Indian indices, let's see this. So Nifty, since we'll see the Indian indices since the tariff tantrum really picked pace. That was March last week. So from that point, we were at 23,700. We are now back at 22,800. So some damage is there, but 3 or 4% damage is there from that point. I think it's not so bad. Nifty Bank Index has hardly dropped since then. We are down maybe a couple of percent. Nifty Next 50 also down couple of percent, not so bad. Nifty Small Cap has made up fantastic ground, also down maybe 2% since March 25, not so bad at all. So it seems that this last 2 weeks of this all this tariff noise that is so high, Indian market has actually not been impacted as much. That is the sort of key takeaway for me from these price points. And in fact, there are sectors that are doing well. For instance, FMCG has gained nearly 5% since all this happened. So FMCG is not impacted at all. PSU banking index is where it was 2 weeks back. Real estate index is one which has fallen dramatically. So 880 to 790, yes, 8 or 9% fall here. Energy index has fallen by a couple of percentage points since then. Pharma index, because of the export nature of that industry and the flip flop of tariffs on that, initially was exempted, and then the news came that they are not exempted, so on and so forth. So there has been damage on pharma. Metals, a lot of damage because China surplus is now likely to flood the market. So metals are down from nearly 9,000 to 8,100. So almost a 10% correction despite this rise. And autos also feeling the pressure because if Indian government is going to be exposed to lower, to if it's going to be forced to lower its tariffs on autos, then domestic manufacturers are likely to get hit. So autos also down by a few percentage points. Capital market, which is the most important that I wanted to showcase here, is that the markets in general, and I believe capital market sector is that sector which is telling you the health of the capital market. I mean, whether it is stock exchanges, whether it is demat depositories, or other merchant bankers or other players, capital market has not dipped at all from the day in the last 2 weeks when this tantrum started. So it is giving me very good optimism that we are swaying along with the global mood, but by itself give, and as soon as we see stability on the global front, we should do well. That is the confidence that this chart is telling me. Similar with public sector stocks. I think public sector stocks are very stable going forward. Consumption is picking up. Consumption was actually higher than where we were 2 weeks back. So consumption stocks are picking up. And of course, there is a lot of collateral damage outside. So when we see uh, Chinese or Hong Kong market, you can see that from March and we've gone down from nearly 25,000 to 20,000 or even lower, stabilizing at 21,000 right now. So more than 20% drop on the Hang Seng index. So huge drop there. And if we see currencies, Swiss franc versus Indian rupee is going through the roof. So what happens in a currency sort of war, which is happening right now, is that there is a flight towards safer currencies. So if US dollar is falling, where is that money going? It is going to go towards safer currencies, and Swiss franc is considered to be the safe haven. So Swiss franc versus Indian rupee has gone through the roof. Good luck with your next Switzerland holiday. 96 to a Swiss franc is now 106. So yeah, good thing if you've already visited, but tough luck if you are going to visit anytime soon. Same thing is happening with euro. So euro has gone from nearly 90 euros, 90 rupees to a euro to 98. So 10% overnight enhancement of your travel bill to Europe, or if you are buying anything from eurozone, you are now going to be hit in your teeth with this slump. So, as Indian consumers, I mean, we import a lot of things, we buy a lot of things denominated in overseas currencies. We travel, we send our kids to overseas education institutes also, and a lot of things that we consume are not manufactured in India today. So, all this gets impacted in a big way when Indian rupee really does not do well versus these currencies. Indian rupee versus the dollar, because the dollar is falling against every other currency, and Indian rupee is also falling against every other currency. So versus the dollar, we are still around where we were at the time of Trump's inauguration. So we were near 86.4, and now we are 86.03. So hardly any change net since Trump came in, but we've got thrashed versus other currencies going through the roof. IT stocks is something that is of extreme worry. If US is going to go through some recessionary spell, IT stocks, which you can see from in the last 2 weeks, have lost from 37,600 to about 32,000, about 15% drop right there. These are the worst hit in terms of whatever is happening in the world right now, and that is a area of concern. The best spot that one could have been in for the last since Trump came in has been gold. We were at 2,700 approximately gold at in dollar terms on the day Trump came in, and we are at 3,226 as I record this, almost a 20% jump within less than 2.5 months. It is telling you the state of affairs of the world. I I mean, for gold investors, for gold holders, this is good news. But the unfortunate part is that gold investors make money when everything else is collapsing, which is not good. No gold investor wants other things to collapse. But this is the only way you can protect yourself. I've been crying horse for the last 9 years now. Please buy gold as a hedge to your portfolio, as a hedge to your currency, as a hedge to your own government. Please believe that this asset class can protect you. Nothing else will do that. That's my sort of uh, end of this video. Is this just the start of this tariff war, or there is more to go? I don't know where this heads. The worst case scenario could be some wars, and the best case scenario is that both China and US come together tonight, shake hands, and say that let's get along. The latter outcome really looks very, very bleak. China is, I just spent 1 or 2 more minutes on this. China is that country which has a 5,000-year history. The Chinese people are extremely nationalist. The Chinese people can bear a lot of pain. They can bear a lot of pain for the sake of their country. The Americans can't do that. The American history is hardly few hundred years old. Americans don't have that kind of nationalist approach. Americans don't want to bear any pain. So this is likely to be won by China, actually, in my view. Even at the cost of hurting their economy, they will not back off. And unless US backs off, I think there is going to be trouble in the world. India, of course, will get impacted, but I think there's a lot of opportunity for India also. I hope Indian government will open a war room to look at these opportunities and try to cash on this. They should be working 24 by 7 on this subject right now. Let me know your thoughts on this. Do like and share these videos. Please do subscribe to the channel, and do keep sending us feedback as to what content you would like to see here. Thank you. Bye bye.